Fantastic. So this is not the secret session, right? This is the big session where, look, we all deal in an incredible world. It's a world full of opportunities. It's a world full of challenges. Did you know when the telephone was invented, Dan, how long did it take when the telephone was invented to reach 50 million users globally? It took 50 years, correct. 37, pretty good, but you're a Harvard graduate, we round it up. Okay. Okay, so 50 years, no, but think about it, the telephone, 50 years, right? When the television was invented, 50 million users, how long? 9. It took 30 years. Blah, 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 internet, 7 years. Internet, it's interesting, right? So 50, then internet 7, right? ChatGPT, 50 million users, 38 days. The world's champion to reach 50 million users is from Japan, Pokemon. Pokemon, 19 days. It's still the fastest in the world, right? But the point being, we are investors, we are entrepreneurs, we are leaders in our societies. The speed with which things happen. And just a couple of weeks ago, we had a crisis here in Silicon Valley with Silicon Valley Bank. And actually, as an analyst, the only difference this time was, it's always like, is it a bank run by idiots? Or is it a bank run by idiots? But really, the defining difference was, it was a bank run at the speed of a tweet, right? That's really the leverage, all the whatever, that happens all the time. But what was new is that we live in a frictionless world. You can actually withdraw millions of dollars, over this year, which really has fundamentally changed things. So maybe we've gone too fast, right? Too fast for human perception, for humans to cope with it. ChatGPT may be able to cope with this super speed. But we live in this reality that is analog, that operates at human speed. And here we are today. And want to have this as interactive as possible here, but I want to start out with a very big question, and I want to start with you, Dan, right? When you look at the macro developments, right, and we've got inflation, right? We've got threats to the financial system, we've got the war in Ukraine, you've got uncertainty in the United States over the political outlook. All of us are dealing with these issues, and I want you, to give me sort of how do you think about the global macro forces? What is the biggest surprise for you and for your ventures, for your enterprises? What are you doing to adapt to these new macro realities that are out there? Just putting it out there, giving you 3 minutes, and then we go around the table, and then we'll open it up. Small task. 50 years.
All right, much easier question before. So in terms, let's start with the economics. I actually think, maybe counter to maybe a lot of pundits you see who are also classically trained economists, that the inflation challenge is the biggest one we have in the global economy right now. And I know a lot of people are very concerned that we do need to think about growth, and I do think GDP growth is something that is important. We should talk later what the appropriate level of that growth is. But my biggest concern right now is that globally, particularly Western Europe, in the US, that we tame inflation. And my hope is that the Federal Reserve is going to continue, not at the same rate, but continuing to, over the next 2 or 3 times, raise interest rates around 0.25% to ensure we solve that. And I do understand there are risks to the economy, particularly the double whammy we now have with the financial system. But my view is the run, whether it was a run by idiots or a run of idiots, is past us. And I think we've seen, if you look at the bank earnings in the last quarter, well, that was a blip, and I understand many companies, suffered pain from that. I do think that's primarily behind us, and it was fundamentally a regulatory oversight issue as opposed to a core financial system issue. So from the start off, I think inflation is my biggest focus for now. From your standpoint about the macro world, I don't think you could look past Ukraine and Russia right now and not think that's perhaps the biggest issue. I think that exacerbated the supply chain challenges we had coming sort of out of COVID. I think we're technically out of COVID now. No one's wearing a mask today, so we must be. And I think that this is still a really significant risk. Yoshi made the comment about Japan being the second largest economy from a democratic perspective. And I think that thinking what's happening in China and the risks in Taiwan after what Russia has done in the Ukraine, I think that is probably the biggest. I'll leave that for the geopolitical conversation today. But I think that's probably the biggest sort of existential risk, I really think, to sort of humanity on this planet. And then third, the last issue, which I think was getting a lot of attention before COVID, is income inequality. And I think it's something that we kind of all, everyone's head nodded, and we all get it, which is great. Unfortunately, I don't think we have any plans in place to resolve this issue. So when we go back to that growth issue, I think they kind of get intertwined a little bit, and hopefully we'll get a chance to talk about that a little bit. I think that it is really a systemic challenge right now, and all of the people, like probably most in this room, we like to talk about free markets and the economy and how we want to be in a capitalist society. We have to make sure we don't create a system that says we're getting a lot of GDP growth, but the benefits of that are so limited in terms of the number of people that they're accruing to, that we're not actually lifting society. We're not actually improving the lot of most people on this planet. We're just increasing the concentration of wealth. So those would be my things.
It's actually very funny, and you had the easy job because you're the first speaker here. Preeti, for your take on your concerns and the challenges that you see. Well, how do you prioritize things?
Yeah, I think similarly for me, inflation has been definitely one of the top of mind challenges. But I think just a little bit more broadly, if you think about the looming global recession, right, and the challenge that has had for my clients as well as the management consulting industry. And so I think maybe first let me talk a little bit about management consulting. Discretionary spending by corporations has taken a huge cut. Right, so companies are not spending, and so that's impacting the industry as a whole. Many of our competitors have had to lay off, delay starts for their incoming hires, as well as they're just looking at flat growth where they've been experiencing 20%, double-digit growth for the last several years. For us and for Kearney, where I'm at, we actually haven't had the same experience, but it may be just where we're focusing a bit more. So as these macroeconomic challenges are out there, our clients are more and more looking for major cost reduction programs. And cost reduction is a core focus area for us. And so we haven't seen the softness that others have seen. But when we look at those cost reduction and major transformations that our clients are coming to us with, it's across the board. There's been a renewed focus on EBITDA improvement and really taking a look at every single part of the business. If we look over the past couple of years, when the economy was booming, there was a lot of hiring. A lot of tech has overhired, so organizational costs have increased, and that's partly just because of the number of people, but also salaries have gone up. And so, organizational costs have gone up. If you're looking across the supply chain, raw materials have gone up. Supply chains are tight, and so, production, manufacturing costs have gone up. So our companies are coming to us looking to, really reduce costs along their entire value chain, all parts of their business. And, as I mentioned, discretionary spend is down. So companies are also looking at how can they, have different or creative pricing, to be able to handle the costs at this time. And so we've got a lot of companies coming to us looking for contingency agreements where they are waiting until there are validated savings before payments are being made, and that's just not for us, but that's across the industry. So there's different pricing models that are coming out, and I really do think that that is actually, it's helpful for both companies. So there's gain sharing too. So I think the way in which we're going to market has changed, and I think the way in which companies are approaching us has changed as well as in the entire industry. But the portfolio and mix of types of projects that we're working on has shifted, and I think that's really, the end of the day, what we're seeing.
Right. Excellent. So we've got inflation, existential change with geopolitical realities, income inequalities, recession risk, focus on cost reduction, struggling or trying to come up with new pricing models. Good. Terry, where's the good news?
I wish I had some. So, reflecting on this question, my concern is what I would term as financialization, the excess of financial assets around the world and the impact on the economy. We have to look at the recent history. We've had massive increases of money supply in the United States, in Japan for quite some time, in Europe, and we have enormous levels of debt. And financial assets are running the system. They are the tail that runs the dog of the global economy. So I'll come to the nature of this problem in both SVB and Credit Suisse, because I think they have implications. So SVB is a whodunit, and whodunit? They all done it, is the answer. It's the management, it's the VCs, it's the regulator, it's the Republicans. It's all their faults, right? It's Donald Trump. It's all their faults. But the implication of this relatively small bank on the entire system is huge. This reflects the problem of financialization. And it impacts at every level, at government level, corporations, individuals. So my mother, who is 100 years old, lives in New Jersey, still sharp as a tack, sends me a message and says, I keep getting these messages from First Republic Bank that everything is fine. So what is wrong? This is a woman who lived through the Depression in France, so she knows some of the issues. So what is the problem? The problem is that things are, as you say, moving at the speed of light, and we are not going to put it back in the bottle. So Yoshi always tells us to come up with solutions, not just criticism. So what is a solution here? Two things about Silicon Valley Bank that are, to me, most significant. Number one, stress tests. The stress tests of the Federal Reserve did not involve any stress test on interest rates. We have had the fastest increase in interest rates in American economic history, but that's not part of the stress test. It's credit, not interest rates. So there's a problem here. No wonder there was a problem. It was not being watched. But the second problem, the problem of Silicon Valley was hiding in plain sight. Because if you had the time and the interest to read their 10Qs, you would have seen, starting in 2022, that they had a mismatch of their liabilities and their assets. So what's the solution? Here's the solution. We are still operating in the 1970s in terms of disclosure of financial information, the work of regulators, and the work of, frankly, the financial industry in terms of looking at this. So what's the answer? We need to put, I'll be a little extreme here, we need to put ChatGPT at work to look at all these financial statements. We need to have real-time financial statements. There's no reason that you can't have it. Real-time reporting, and we have to have a complete revamp of all of the models that are being used by the Federal Reserve and the Treasury in terms of the analysis of the economy, what's going on in financial institutions, and what the implications are, and then what actions need to be done. And the reason is this. Little SVB, if it had gone too far, could have upended the entire banking system, which would have put this economy and ultimately the global economy into an enormous amount of difficulty. So we have an urgent issue that we have to address, And what we need to do is modernize the use of the tools in order to be able to understand what's going on in real time and take action. Credit Suisse. So, a statement by the head of the Saudi National Bank that I'm not going to increase my stake beyond what it currently is, which, by the way, was not because he didn't like Credit Suisse, it's because that legally he couldn't go beyond 9.9%, right? Triggers a run on that bank, not properly disclosed by the management, for which they have been ultimately punished, because then you had basically about 10 billion Swiss francs per day going out the door, results in this bank being sold to its biggest competitor in Switzerland. Now, there are some things that you have to just step back and look at. This was decided not by the shareholders, but by the government. And keep that thought in mind. Secondly, the shareholders get something out of it, but the bondholders get wiped out, which is not the way bankruptcy is supposed to work. But this is not a bankruptcy. And why is that? It's because too big to fail means too big to fail. All these G-SIFIs have living wills. But what the Swiss situation reveals is that if you tried to execute on the living will, you would upend the financial system. It cannot be done. These institutions at the G-SIFI level are too big and too interconnected to be unwound. So what does that mean? What's the implication? Again, things move at the speed of light, financialization is much too high, and we have potential crisis. There's only, in my mind, again, back to what Yoshi says, come up with solutions. There's only two solutions. One of which I would have to be honest with you and say is not one that I would imagine myself saying, because like Dan, I believe in free markets and capitalism. But I think governments are going to have constant, direct oversight of these institutions. That means sitting on the board with very senior people who know what the hell they're doing and what they're looking at on top of these institutions in real time, at all times, and coordinated throughout the world. Again, Credit Suisse could not be unwound. It could not go to bankruptcy. Because if it did one of those two things, we would have had a global financial crisis. So that's one option. The other option is to break them up. To say, you're too big, it's too much. We're going to break them up in different ways. Utility banking to one side. Again, I would not imagine I would be saying this. Maybe we have to go back to Glass-Steagall, investment banks to the left, commercial banks to the right. But what we have now is not sustainable and needs urgent action.
So it's interesting, right? Because most of us, we grew up in the period of deregulation, right? Minga dekiru koto wa minga yaru beki. Right? What the private sector can do, the private sector should do. There were lots of privatizations that happened starting here in the United States, including, Japan after Nakasone government throughout the 1980s. And now the genie's out of the box, right? And this point that Terry makes that give or take after the global financial crisis, the money printing, the financialization. I mean, it's spectacular. Do you know that in this country, America, it used to be $1 from the Federal Reserve supported $17 of the economy, $17 of GDP. Today, $1 from the Federal Reserve supports $7. So it's been an enormous pump. In Japan, it's even more depressing. Right? But nevertheless, you had this financialization. We realize that we want to keep the entrepreneurial spirit. We want to keep private enterprise. But something has gotten too big. So how do we fix it? Dan, what's you're in the White House now, right? You're empowered. Finally, you made it, right? Yoshi gave you all the campaign support that you needed. No, but in all seriousness, the solutions that Terry mentioned, how do you think about it?
Well, I think the big question before you decide what the right answer for the solution is what do you want to achieve?
Yep.
And I think you teed up, I think, a really important issue, which is how upset are we first by some of these phenomena? And when you were talking about the challenges for the management consulting industry, and I've been reading about the Bain and McKinsey, all the things you highlighted, I think really importantly, I'm a proud alum of McKinsey and Company, so I'm positively, disposed towards the industry. But my thought was, who cares? Who cares? So a bunch of people that just graduated from Harvard Business School, God bless them all, and I know there are plenty in the room, are going to have to start their job 6 months late? I mean, I don't know. Is that really going to destroy the world? And then let's get to the bigger, financial side of it. What happens if we don't pump up so much money into the economy? What happens if Japan goes from a roughly 0% growth economy to a -2%? What did Japan shrink 4 or 5% coming out of in the middle of COVID? I don't know. Did everything fall apart? I'm not sure what happened that's so terrible. So I think the deleveraging that I think we absolutely need to do, we have to understand there will be economic pain. If I'm sitting in the White House, it's a little harder to do that because assuming I want to get reelected, a recipe to not get reelected is to deleverage and slow down the economy because so many people, of course, vote based on their economic well-being. But I think there's an opportunity for us to accept that we have over-leveraged ourselves. We have sort of worshipped the goddess of growth, and it's time to take some of that out. And so if we deleverage some of from the financial system so that it has less oomph behind the rest of the commercial sectors, I think will be lower growth. I think there are implications for that. Some of them are challenging because we do have leverage. But again, if we have lower interest rates, it also makes that burden a lot less. So that's kind of my high-level answer is, let's slow down.
So what's interesting, right, is he talks about deleveraging. Anybody here from Japan? Well, you guys all work for the funky companies. Big Japan is a net creditor.
Yeah.
They are a net creditor to the system, right? In America, yes, you're right, enormous amount of private sector debt, right, together with public sector debt. So there's a little bit of a friction, actually, right, between Japan being in this wonderful position of being a net creditor to the world, the corporate sector not being dependent, on the financial system, while in the United States you do have, that incredible. So, when you look at this in your dealings with American companies, right? How do they think about their capital structure, about leverage, and how to go forward now that interest rates have gone up?
Yeah, I mean, I think the fact that interest rates have gone up, and so as a result, I think just right now everyone is really thinking about conserving cash, right? And so spending has been cut, and so I think a lot of times it's capital expenditures they're not happening, right? And so I think it's just looking at across the industries, looking at tech, right? Because we're not seeing the spending that's happening there, the companies themselves are hurting. And I think, if we take a step back though and think about the economy and the fact of the matter is that you're saying slowing things down. I think when we think about slowing things down, it's looking a little bit more about governance and what governance needs to be put in place, just at the corporate level, and then also I really thought, Thierry, your point here about putting governance in just across the markets and seeing how we need to have some more structure. Yeah, it's all for free markets and capitalization, but when we look at what's happened with the bank run, how do we put in this governance, right? And so I think that's become something that should be something of importance that needs to be, that we need to pay more attention to.
So what's interesting, I'm going to switch gears a little bit, right? So there's all these problems. Wow, there's so many opportunities. Do you know, since Mr. President Biden, for the first time in many, many years, implemented or brokered an American industrial policy, right? This ridiculous name, right? And Anti-Inflation Reduction Act, right? Which has nothing to do with anti-inflation. But you know that
It's
since
incredibly inflationary.
no, but that's, you have a point of view. I see. Okay. No, but what is interesting, do you know that, Hori-san, do you know that? Since that Act was brokered, and it was, basically passed, actually turned into law, which is amazing in America. Since then, there have been $400 billion of investments made into the United States of America. 36 hours after the Anti-Inflation Reduction Act was passed, Toyota, Honda, Panasonic, Keyence alone announced about $20 billion of new factories to be built here in the United States. So there is a lot of problems and a lot of issues, and fine, hey, let's have some wine, right? Terry is very good, at selecting the wine. I think, Freya, you drink wine?
Yes, I do.
You do. No, but there's all these problems, but there is an unbelievable amount of opportunities. Dan, where do you see the opportunities right now?
Well, again, opportunities are oftentimes structured around growth, to your good point. And I don't think, I'm not anti-growth, to be clear, and I think sectors of the economy need to do that. I think there's a huge infrastructure opportunity. Are you talking in the U.S.? Yeah, so starting with the U.S., I think there's a huge infrastructure piece. That's actually the part of the Biden plan that I'm most disappointed we're not making as much traction. I actually look at the Anti-Inflation Concept Act is really much more industrial policy, saying how do we compete with China on key components, primarily around semiconductor innovation. And I'm not saying that's not important. I think it is important. And I think some of the supply chain challenges we saw coming out of COVID, we may be over-pivoting a little bit, but I think there is an opportunity to create that sort of strength. So by nature, when I tend to think about opportunities, I am, again, classically trained economist, and I actually believe the comparative advantage, the concept that the economist David Ricardo first articulated, is the key, which is we should be trading. We should have a more interdependent world. And I know that there's risks, particularly on the financial side with that, but I think that really optimizes the most for most people. So I'd love to see the biggest opportunity I see is how do we move away from the recent trend towards sort of everyone kind of putting their head down and thinking about a closed economy. If you think about some of the principles when Yoshi was talking to me about G1 and the concept of broadening it to the world, was the idea, not unlike the World Economic Forum, to say how can countries actually work better with other countries and not think in such an insular way. So I think there's a huge opportunity to move away from that. I'm not saying there aren't challenges, particularly because of the way we're viewing China in Western Europe, although more so in the United States, I think. But that would be my first one, was more globalization. I think is a huge opportunity to increase the well-being for everyone on the planet.
Terry, where are the opportunities?
So I'll start with financial services because that's what I do day in and day out in my business. And I would say that there is a global opportunity to look at fintech, which has absorbed quite a bit of capital, but by and large has failed because the founders there either they're very good at the tech and they don't understand the fin, or they ran along on the fin, but they didn't get the tech right. There is an opportunity to go through all of that and create more viable competitors that do two things. One, take the risk out of the system for the individual customer, while at the same time providing a better service to the individual customer. The irony of these too big to fail banks is that they don't serve the customers well because they don't have to. I'll talk about Japan. The big 3 or 4, and I have accounts with all of them. But when it comes to service, they do not care. I mean, you realize now that you have to make an appointment to go to Mizuho or MUFG or SMBC, and even if you have one, you still have to wait. Right? And you probably won't get what you want, right? And it's not that much different, in the United States or in Europe. So I think there are opportunities to create new models, but you have to go through the attempts at creating new models, which by and large have not succeeded, and work through that to create new models. So I think that's one. A second one is everything to do with the health part of healthcare, maintaining your health as opposed to waiting until you do not have health. But there we have to be very careful because here in the US, this is being taken over by, dare I say, private equity, and they are not delivering the outcomes that are needed. And if we don't wake up fast, there's going to be an enormous backlash, which is going to cost everybody. particularly the owners of those businesses. So the third one, which I think again is a global opportunity, is services to immigrants. Services to immigrants. I have a view, not exactly in the mainstream, that we will see significant immigration, for example, in Japan. It's inevitable. After we've eliminated all the other possibilities, we will come back to that. I am quite sure. But what we need to do is and I think this is a private sector opportunity, is to create businesses that can serve that constituency in terms of bringing them in, educating them, getting them ready to be for the workforce, figuring out how they can take care of their children. Yes, there's language services, but there's also how you go about living your life, right? And people will pay for that. Either companies will pay for it or individuals will pay for it. Frankly, it's the same thing in the US, although we don't think in that way. It certainly is an issue in Europe where basically there continue to be large numbers of immigrants, now through what's happening in Eastern Europe, but where there is no system outside of the government system to help integrate these people. And so if you take a country that I know well like France, they've just created enormous ghettos of immigrants who do not have a way. Integration is a loaded term in Europe, but who do not have a way to figure out how to live their lives. I think that's a big business opportunity.
So it's interesting because people talk in the developing world. They talk about financial inclusion, right? They talk about microfinance, and the irony is that actually in the G7 world, right, there is a case to be made for financial inclusion. And just by the way, you're Japanese, right? As you know, I love Japan, and I always. People say you're crazy, you're too optimistic on Japan, right? But Terry mentioned the point about immigrants. Do you know a fact? In Japan now, 1 in 4 is over the age of 70. In fact, the only reason Terry and I love living in Japan is because everybody else gets older faster than we do. No, but on immigration, do you know this? Of the population 15 to 65-year-old, which is the working population, nobody goes to Japan to retire. Right? But for the working population, already immigrants, non-Japanese, right, are over 9%. In Shinjuku, right? 24% of the people 15 to 65 are non-Japanese, which is quite interesting. So ironically, immigration is actually happening. But opportunities.
You need a border wall in Japan, it sounds like. That's too many. Keep them out.
That's okay. They keep out the Germans now, so that's okay.
Yeah. So in terms of opportunities, I think we mentioned it, or Jesper, you mentioned it early on, but just ChatGPT. But if you think about AI, ChatGPT, automation, all of that, there's tremendous growth. There are many of my clients are coming asking how do they deal with that. I'll see just in the management consulting sector really thinking about that. There are some BPO players that are developing sectors or offerings really around this and trying to really figure out how can companies harness this technology. And if you think about it, what is that going to do to the workforce? There should be capacity that's created within the workforce if really we're able to harness this technology. But it's not that those workers are going to go away. It's how can we use that talent and that mind share and really use it for more strategic purposes. So I think that there is opportunity for growth in that area. I also think growth is going to come. I work a lot in healthcare, the virtualization of care. There's more and more companies entering that space, and there's huge opportunity there. And not only is it opportunity for economic growth, but it's also for population healthcare. So more and more people are having access to healthcare as well through the virtualization of care. And then I think the third, kind of stepping back a little bit, if you look at, just trade and let's take, for instance, China, right? If we think about our reliance on China, there's been a lot over the past several years of decoupling our economies and so forth. But I think through collaboration, there's more to gain than through confrontation or decoupling. I think Janet Yellen just came out yesterday, our Treasury Secretary, saying that there is, that we need to be more constructive and collaborative and have a healthy relationship with China. And if we think about globalization and, is there opportunity to strengthen our relationship with China? Absolutely. However, many of my clients have been coming over the last, over the last year, essentially, of how can they decrease their reliance on China, particularly from a supply chain perspective. And, the opportunity there is to, as we saw with COVID, right? Supply chains came to a halt at some point during that because of the reliance on China, if you were that reliant on China. And there's other reasons, tariffs and IP concerns and so forth. But if you think about, going to alternative Asian countries, right, and finding growth there, or else coming back closer to home and reshoring near Mexico. But these are all opportunities for growth in the supply chain areas as well. So I think that all of those are happening.
Right. I mean, it's so interesting, right, that the set of parameters that is changing, right? And it's interesting, it's not just inflation, but you've got technological advance with ChatGPT, and again, I'm not a technologist, but in terms of what it does and the potential impact that it has on the service sector is just huge, right? In terms of the displacement of existing employment, but as a result of that, also the freeing up of resources that actually has. And then, of course, the entire healthcare spectrum, right? Absolutely enormous. I want to switch gears before we open it up for Q&A one more time, right? This is off the record?
No. We can make it off the record if you like.
Okay, well, so one of the things that I often get when I, discuss with senior Japanese, right? Your grandfather's generation, right? So my kind of people. No, but, there's like, okay, well, something has changed, but really what has changed is America. What has changed in America is that when Hori-san, from Japan, myself from Germany, when we were growing up, there was no question that America was the model, right? It didn't matter if you were an artist, if you were a business person, if you were a scientist, no question that America was the land, right? No, that was you. No, but so the beacon, the light, that everybody aspires to, right? The question now, if Hori-san and I go to Jakarta, and there is a 17, 18-year-old aspiring, Indonesian, does he or she still aspire to go to America? He or she still aspire to make their way in America? I know all of you, we're in Silicon Valley, we still believe that. But, there is a little bit of a confidence crisis, right, in the stability of the United States, the predictability of the United States. Dan, help us navigate a little bit about that. You're a proud American. You believe in the system. There have been shocks to the system. There have been challenges to the systems. Help the world understand why America is still great.
So it is actually kind of funny. It's almost seems a little sarcastic the way you said that, Jesper, but it's actually true.
I'm German. I couldn't be sarcastic.
He couldn't help it. Yeah, good point. Yeah, it would be counter to your culture, but it's actually true. I'm very bullish on the U.S., and I still think it is the right person for that 17-year-old from Jakarta to want to come. I think it is still the land of opportunity. There's a great expression that someone once said about our government, and they said that democracy is the worst form of government, except for all the other ones. It was Winston Churchill, I think, who first said that. And that's the way I feel about the American system. It's terrible, all the things we've been talking about, all the problems, but it's better than anyone else that I've seen. And there's certain places we have nostalgia here for sort of like Scandinavia. We like to talk about here in the US about if we could just be like Norway, because everything's so good there and it's clean and I don't know, it's like 4 million people. I mean, it's a little bit easier, when you have, I made that up. I don't know how many people live in Norway, but it's probably close. But I would tell you my view is that these things go through cycles. And I actually believe the colleague over here, I'm sorry, I don't know your name, Alan, was spot on when he said, actually in the 80s, everyone in the US business system said, Japan, that's the future. Japan's winning, productivity is better there, their workforces are better, their loyalty, that was the model, and we're all gonna fall apart. We're just a bunch of investment bankers as we were starting to build our financial system and management consultants, and we're never gonna be able to compete with Japan. And obviously that didn't turn out to be the case, not that Japan isn't a fantastic country, but it didn't take over the world, right? I think it's very similar to where we are with China. And I think right now there's this sort of self-loathing we have a little bit in the US where it doesn't feel as predictable, it doesn't feel as solid, it doesn't feel as clear that we can be the leaders. And I think our challenge is to no longer try to think we should be in control, but rather to think we should be the shining example, the quote-unquote city on the hill. So my hope is in the US, we don't try to tell people what to do and tell people to be like us, but we support them, particularly in Europe. And again, I'm not trying to get overly political, but in the Trump administration, we did an infamously terrible job of the way we thought about our allies. And we created tremendous opportunity for a non-democratic country to gain in prominence. And if we instead supported and embraced our colleagues in democratic nations, I think we would do a lot more to increase the long-term stability of the world, but also the US. So that's kind of my hope. We take a broader perspective, we try to support our allies, we accept that we can't control everyone, and we shouldn't try to control everybody. That's where I come out.
Terry. So, I relate this to a few things. So first, there is certainly, and we all need to be aware of it, an attitude in Japan now expressed at the highest levels that the United States is not a trustworthy ally. I think a good part of that came from Donald Trump, who behaved like a madman, and that was very hard to explain. I think to give credit to the late Shinzo Abe, he was the only world leader who knew how to handle that madman. And by getting him on the golf course and trying not to talk about serious issues too much. But that is a problem. I think that now the further one is that the United States is undermining the fundamental rules of world trade. And this is taken very badly by everyone, and particularly by Japanese corporate leaders. So America has some repair work to do there. Now, having said that, America has always behaved in its own interest. It's just that the appearance of it, again, starting with Trump, and now I think with these trade actions that, are not presented with a lot of explanation or, dare I say, even though you might think it inappropriate or unnecessary, empathy with regard to America's trading partners. So that's the problem there. So what still makes America great? I relate that to myself. I have a French name, an American accent, and I'm married to a Japanese. I'm extremely well hedged and very fortunate. But here's the serious point. My parents came to this country in the 1950s. The only way they could, legally, was to be sponsored. They were sponsored to work as butler and cook for the Pillsbury family in Minneapolis, Minnesota. That's how they came to America, because my father's dream, he volunteered out of his high school, 17 years of age, for the Free French Army in 1944. And who did he meet? Immediately, everyone, the different elements of the French Army were assigned to the US Army. And he lived with American soldiers. And in meeting them, he said, I know where I want to go. I want to go to America. Now, it took him 7 years to finally realize that dream, but he did that. And all the possibilities were open to them. So if you look at today, for example, here in the United States today, that opportunity is still open to everyone. The challenge we have is that America has higher highs and lower lows across society, across economic performance. And, sometimes the higher highs don't necessarily do an excellent job of communicating. And certainly when we look at the lower lows, it can be rather grim to think about it. And so that's the challenge. But the opportunity is open to everyone. So I reflect on one thing, and then I'll be quiet. So today in America, I don't know the precise number, but in the Fortune 100, how many Indian origin CEOs do we have? It may be like 10 or 12. 10 or 12, right? How many in France? 0. You know, when AXA, the leading life insurance company, appointed a German as the CEO, the reaction in the press was that the Bundeswehr was at the gate. It was very badly taken. Very badly taken. And in Japan, you know, the number of Japanese CEOs is few and far between. But here's the bigger problem in Japan. And I did sit in that seat. And I tell people today, you know, it was an interesting experience. I'm not sure people should try it at home. But here's the real issue. I was transplanted from another organization into that organization. Things will have really changed in Japan when somebody who starts at the bottom goes all the way to the top. Then we will have seen a fundamental shift. So America still is, you know, rather unique and does offer an opportunity that indeed does make it great. So I'll finish with one last thought. There is an enormous drain of talent leaving China today. This is the reality. Where should Americans want them to go? Right here. You know, I think it's similar to what happened, you know, in the late 30s and 40s of, you know, European Jews moving to America, who played a very significant role in academia, in science, in the arts, in literature, in business, in the law, across the board. There may be a similar opportunity coming ahead. And America is the one country that can exploit it.
I'll keep it short. So a similar story, you know, what makes America great? It is the fact that it is the land of opportunity. My father also came over to this country in '72 with $7 in his pocket, he likes to say. And, you know, he's now 82 and is retired, but had a very successful career. And I think the fact of the matter is like, you know, people can come over from other countries and do things like that. And if you think about women and the number of women that are in senior positions now in the United States, it's incredible compared to the Asian countries as well. You know, even in our company, Shigeru-san and I were just talking earlier, you know, 20% of our partnership here in the US is female. In Japan, we do not have one female partner. And so there are you know, lots of opportunity here. And I think also, you know, just kind of going back to maybe the Trump administration and what's happening here in the US. So, you know, there has been political instability for ages. And I think it's been exacerbated over the last 4 or 6 years. And there's been a lot of social issues, political issues that have been bubbling under the surface, and it has erupted over the last 4 to 6 years. And now we are the U.S. is faced, like we're having to deal with it because it's here. And there's very, you know, people have very strong beliefs on both sides about what we should be doing. But I think one of the things is the fact of we do have free speech. We are allowed to voice our opinions. And, you know, we do have to deal with it as a country. But I think the fact is that we're able to voice our opinions and be able to help shape what happens. And I think that in itself is a great thing.
I mean, it's so interesting, right? Because, you know, there's all problems everywhere if you look, but there's also solutions. And, you know, the land of opportunity, right? The ability to rise and to have a genuine meritocracy. Yes, there are fears of a plutocracy in the United States, fine, you know, but the transparency and the ability to be rewarded for your own effort, for your own dreams, for your own aspiration, you know, still is, you know, incredibly powerful. Before we go to Q&A, I want to leave you with one thought on this. Your country, what's the average age? It's 35. So, come on, you gotta go. I'm sorry about this. So the average age in America is 35, right? What's the average age in your country? It's 50. The average age is now 50. What's the average age of a Japanese politician? Shugin Sangin? 56. 56. In America, so 50, 56. Japan is actually in the G20 the closest that the age of the politician mirrors the population. In America, and this is my point that I'm trying to make, in America, the average age right now is 35, but the average age of a senator or congressman is 64, right? When this generational change happens in America, and I don't know whether this will be in the next presidential election next year, but this generational change in America will happen, and America will start to be the shining light again, in my personal opinion. Now, Q&A. Anybody from the audience? Any question? Anything? Hi, dozo. And by the way, German rules. If the question is more than 30 seconds long, a bottle of champagne for everybody in the room.
Me? Okay, will do.
30秒だよ.
Okay. As a founder and CEO, I'm in the position under pressure at the same time as survival and growth. So then, what do you recommend? I want to build a global business, and then what do you recommend? Stay in the United States for the next 2-3 years, or go global immediately?
どうぞ.
Oh,
Huh? No,
No.
we don't do that. Because the answers are under the same rule.
all right, 30 seconds or champagne?
Yep.
All right. So I'd say in this situation, in this economy, I would not be overly aggressive on international expansion. I would focus on the singular most important market that you think you need to add to your business. That may be the US. And then I would take that approach. And then I would wait until you're successful there and sort of demonstrated that you can be successful in another environment before thinking about the second and third moves. I'd be very conservative that way.
Thank you so much. That's a great answer.
Preeti, any quick follow-on? Or
I agree. I think
you
that's-
agree?
Yeah, yeah.
So build your home-based strengths and then go from there. All right.
I take it.
Good.
Thank you. Appreciate it.
Right, so don't go to Oklahoma. Right?
Hi, Yu Chando from Japan Post, and my question is, how long, months or years to be, this recession?
Dozo. Terry?
I think it'll be less than a year.
So what is interesting on that as an economist, right? The US doesn't futz around. When there's a recession, they cut rates. Stuff will happen, right? In Japan, it takes a long time for something to be recognized as a recession or something that needs government policy. In America, when unemployment starts to go up, they'll start to act very quickly. Any other questions? Hi, dozo.
Thanks for the great discussions. My question is to Daniel. So in terms of Silicon Valley, what the Silicon Valley is going to change? It's a last 2 to 3 years, everybody go to the tech giant and the entrepreneur go out of Silicon Valley. So what's the next 2 to 3 years?
It's the rumors of the demise of entrepreneurial opportunities in Silicon Valley are dramatically exaggerated. I think these opportunities are still here for entrepreneurs. I think this is still the best place. And by Silicon Valley, could that include Seattle, Washington? Yes. It could include Austin, Texas, maybe. But what I really mean to the core is that the tech community, I think the opportunities are still greatest. I think the Bay Area will be the center of that for at least the next generation. And so my bias for whether it's a 17-year-old in Jakarta or you building your business, this is a place you want to be focused. As you try to get to bigger and bigger scale, you might consider the fact that it's really expensive to do business here. And so you have to be really smart about which resources you want here, key senior ones, but you might find another location that's more conducive to building a bigger organization with better costs.
Any other questions? Dozo.
Discussion, and I have a question about the acceleration of the inequality of the opportunity, because I know that America is nice, great, Japan is nice, great, but the aspiration is the opportunity. But maybe the acceleration of the opportunity, acceleration of the inequality of the opportunity is growing in Japan and the United States too. How do you feel that?
Dozo. Preeti? Any?
I wasn't fully understanding the
So,
question.
so the
Acceleration of inequality.
acceleration of inequality.
Here in
Yep.
in the U.S.?
Yep.
Yes, especially focus on the opportunity.
On the opportunity to, yeah, I mean, I think inequality here in the U.S., like, I mean, there's been lots of strides in trying to make things equal, right? And that is from, you know, a gender perspective, a people perspective, but also like an economic perspective, a socioeconomic perspective, all the focus on ESG, right? Like there is a huge focus on that, I think, right now in the U.S. And I mean, I think it's top of mind even to CEOs and to board directors as well.
So I would say this. I think my own view of why the inequality has increased in Japan as well as in the United States goes back to what I started with, financialization. So, you know, you put in all this money into the system, you lower interest rates, and that naturally allows wealthier people to become wealthier. I mean, it's mathematics, you know? And markets can go up and down a little bit, but still, the trend line for that. If you don't have any assets, I mean, if you're at the bottom end of the pyramid, you don't have the opportunity to benefit from these ultra-low interest rates and the financial opportunities that creates for you. So that's just the math. So how do you fix that? Well, you know, in this country, liberals and Democrats would say taxation, regulation, et cetera. It's one approach, and maybe some of that is inevitable. But my own view there is that, you know, you have to provide growth from the bottom up. So what's the biggest, I mean, America does have a number of problems. What is, for the long term, the biggest single problem today? And that is the problem of public education. It is massive and enormous. Just go down the road here to San Francisco. You know, children in the 3rd grade, on average, are reading at the 1st grade level. Because of the way the system works, they're just thrown through the system. And by the way, you know, those who have the means and the ability, they have their children in private schools, not in public schools. So this is the challenge. The public school system in America, sadly, is broken. Now, it was not always thus. The public school system of the 1950s was extremely strong. And by the way, there are public school systems that are strong, and how can you end up with a strong public school system? It's very simple. For the majority of America, the allocation of funds takes place due to property tax. So wealthier areas get more money for education. And that creates just an increasing imbalance. This is a dramatic problem that has to be fixed. I wish we could take some pages from India, where I do spend time, which has also a problem of a public school system, because there aren't schools, but has created this vast, highly effective infrastructure of online education that is making huge differences in educational outcomes.
Yeah. And this is interesting, right? Because that gets you where Japan can actually teach a lot to the United States of America. Remember, it was always, oh my God, the Japanese education system is terrible because of this, that, or the other. You know, but the reality is, you know, that the sort of basic skills that are being taught, right, and the opportunity set that is being created, right, is a model in Japan. If you look at what economists call the intergenerational earnings elasticity, so that basically looks at, you know, if you are a child, right, what is the probability that the child's economic status is going to be higher than the economic status of the parents, right? So does your mama and papa have to be rich for you to be rich, or do you have on your own an opportunity? Japan is #1 in the world in terms of the opportunity set that is actually offered. And actually, I'm happy to share the slide with you. It is scary that in the United States, it is the worst. Yeah. And what country is the 2nd worst? China. Which is very scary. And maybe the data, China is still a young country, right? Maybe the data is a little weird, but if you have to be a princeling or the son or the daughter of a Communist Party member in order to be successful, if that's the reality of China, then you have a real problem. But the interesting thing is, and to conclude this session, which, you know, really fantastic insights, you know, great passion, you know, Japan, right, does have a lot to teach to the United States of America. Now, America will always be very arrogant and very missionary in their own things. The Japanese are not missionary, right? But the reality is, by looking at what the government provides, and remember, it used to be, when you and I were growing up, it was big government versus small government. We should transcend that and go to, we don't care about big, we don't care about small, we care about good government. And the fact that there is social capital and education is a big part of social capital. In America, if defense is the only big committed social capital, that's not going to be stable for society. And so whether it's infrastructure, whether it is education, initiatives on that scale, Japan has a lot that it can teach, right? Including, of course, the Globus MBA program, that they're trying to do here. Thank you very, very much, everybody, and very much enjoyed. We hope we can continue the discussion over lunch. Thank you.